All right. Happy Friday, fellas. Always good to be here with you. John, I see that Knicks shirt. I see you. You're up 3-2 in the series over the defending champs.
Yeah, I always try to have the shirt have some meaning. Can't do it every week, but I try to make it have some meaning. Last week was Villanova when the Pope was announced as a former Villanova grad. And there's a connection to the Knicks there because the Knicks now have 3 Villanova grads on their team. So I am very much so into the Knicks right now. We'll see if they can close it out. The game is tonight.
I would love to see your Knicks versus Brandon Quittam's Timberwolves in the finals. That'd be fun.
There's a lot of good potential outcomes. Knicks, Pacers, throwback to the Reggie Miller, Patrick Ewing days. It's a lot of good potentials for the NBA here.
Steven, how many steps are you at right now?
What do we got? Let's see. Just about 10K.
Ooh, I got you, man. It's the early morning walks. You walk a lot more in the afternoon than I do. I'm at 12K.
Ooh, okay.
All right. Happy Friday, everyone. Thanks for joining us. Welcome back to Swan Signal Live. Thank you to Mara for supporting the show and securing the Bitcoin network. Thank you as well to BTC and DC. Big conference happening in September 30th, October 1st in DC, bringing together a lot of policymakers, legislators, Hill staffers, lobbyists, and talking about Bitcoin policy at a crucial time in Bitcoin's history. Going to be a great conference. Hope to see you all there. Swan is helping throw that thing. All right, guys, plenty to get into. We had some fun this week.
Dirty scant. My body has become Bitcoin. Well done, dude. Congrats.
Through the use of creatine as the medium.
That's right.
Creatine is the greater vehicle. Creatine is the greater vehicle by which the body becomes Bitcoin.
Yeah, you've that meme where it's like you progress down into like this one. Your consciousness is one with Bitcoin. You've achieved Bitcoin maximum status.
Yeah.
Awesome. We've got tons to talk about. Let's start out with a couple of price predictions. We've got we put in the thumbnail here 500K Bitcoin. We're getting some bullish price predictions now that things are moving again. Adam Back, who is known for his very bullish price predictions, they don't always come true. But
Adam, let's run it back.
Let's run it back. So he's saying 500K to 1 million this cycle. He says diminishing returns bears are absolutely wrong and off base. And so that's pretty exciting. Thank you, Adam. Bitfinex analysts project a medium-term target of 150 to 180K, hedging their bets, being way too reasonable. Fellas, where are we going now that we're really close? This is about where we were in last week's show. Holding steady, consolidating around 104K, 102 around there. We've got strong support down at like 98 or 100K. It looks like we're going to hit all-time highs sometime soon. Do you have any changes to your predictions for peak price in 2025?
I would love to hear something from Vibes Capital Management on this, actually.
I'd be happy to, man. It's been a great week for us. I'm sure you've seen. We've had a lot of key hires, just a ton of great people joining the team. Excited to participate in a new take on asset management. So we had a great podcast the other day. Honestly, the answer is simple. We're going to 500K. Don't complicate it. We estimate about $100 billion in buy volume from corporate treasuries coming online, and we also estimate a reflexive vibes-based flywheel as the U.S. government starts to make Bitcoin buys. The vibes are good. The vibes are high. Don't overcomplicate it. The target's 500,000.
Well, the timeline's coming up, right, for U.S. buys. Wasn't it like a 60-day timeline to come back to the president with recommendations for accumulating Bitcoin through the executive branch using budget-neutral strategies? This is not the Bitcoin bill, which seems to not be doing so well right now, getting out of committee. But yes, we might see some buying from the U.S. government, which would be, even if it's in the low number of billions, is a big buy. It's a sailor-sized buy. But even if that were the case, the signal is what matters here, right, guys?
Correct.
Yeah.
That will send things going. We've got companies in China, companies in India starting to stack Bitcoin.
Yeah.
The company in China said they're going to start with a 5,000 Bitcoin buy, which is a big move. We've got 21 entering the game, promising a 42,000 Bitcoin buy. They've already got some of that on the books, I heard.
Yep.
So
They did $500 million the other day.
Something like that.
Yep. So
you got
exciting
asset.
stuff.
You got asset from Strive Management. They're doing a unique strategy. And Nakamoto launched recently soon from BTC Inc.
That's right.
Hey, I got a stat for you guys that I think is at least somewhat interesting. So in 2021, the number of days that Bitcoin closed above 60K. Obviously closed is kind of in quotes here. If you look at the data, usually people pick like, I don't know what they pick, 4 o'clock Eastern or something like that. They call that the closing price of Bitcoin. 40 days in 2021, the Bitcoin price closed above 60K. So far in 2024 or 2025, we have 30. If we close today above, I'm counting it at it's either 36 or 37 days closed above 100K.
That's more than I would have guessed.
Yeah. So pretty soon we'll have more days closed above 100K in this time period than we did above 60K in 2021.
Let's take a quick look at this chart relevant to this conversation. John, you posted this in the Slack chat. You want to go through this?
Yeah, it's an interesting one with these types of things. I would always remind people that some of this is not necessarily known. Like some of this it is observable, but others they have to make some assumptions here. Like individuals and private companies, it's not like those people are always disclosing, "Hey, I'm an individual and I'm selling my Bitcoin." They have to make some assumptions about what's going on chain.
On-chain analysis, yeah.
Yeah, it's probabilistic, all that stuff. But I think it is interesting. I mean, it just shows that the public company trend is certainly heating up. To Steven's point, we don't see that stopping anytime soon. There are ETPs. That's the second chart there. Those are the spot Bitcoin ETFs. Those are gobbling up a lot of Bitcoin. And there are sellers out there. I would venture to guess that the individuals and quote unquote private companies, that's maybe a lot of whales that are taking some profits, because if they've been in Bitcoin for a long time, selling above 100K is undoubtedly life-changing for them. So I don't see this as really too alarming. There's also ways you can look at this and say, if the public companies and ETFs started to own like some crazy percentage of all the Bitcoin, then I might be a little bit concerned. But you're still talking about public companies and ETFs owning like 5% or something of each of the Bitcoin supply. So it's still relatively small when you look at it as a percentage of the total.
And you need to understand that like those public companies and ETFs are themselves owned by millions of individual shareholders. Like those are not like, it's not like, Michael Saylor has like unitary executive control in certain ways.
It's not a single member LLC.
No, it's not a single member LLC. You know what I mean? And so it's like, these really are just giant aggregates. It's kind of like saying how many Bitcoin are on Coinbase. Yeah, there are certain risks to concentration, just like there are certain risks to concentration in Coinbase that we saw. But like, it's different than like one entity that is singularly owns this much.
For sure.
The BlackRock's ETF, IBIT, has recorded its 19th straight day of inflows, which is the best run since early this year, pulling in $365 million with over $1 billion since mid-April. This is obviously could be institutional investors or companies. And, Coinbase has been in the game since 2012, 13, something like that. Very, very early. Props to Brian Armstrong for being early and for bringing a lot of people into Bitcoin, brought, the first really reputable Bitcoin exchange in the world, and, did a lot of good, and then started peddling the shitcoins and went down the wrong path. They could have accumulated 1 million Bitcoin relatively easily had they adopted a Bitcoin treasury strategy early on. But they've just not done it. They have Bitcoin in their treasury now, could be way more than it is. And unfortunately, there was a cyber attack. Hackers paid overseas employees for account data and internal documents. So the estimated cost of the hack is around $400 million. It's a massive hack. Coinbase is offering $20 million for information related to the hack. They have promised to reimburse affected customers and that they are strengthening controls. But this is a big deal, guys. Do you have any thoughts on the Coinbase attack?
Well, I learned that they do, in fact, have a support team. That was kind of a surprise.
Heyo.
No, yeah, it's crazy. I'm thankful that what was leaked was somewhat limited in scope, but it still sucks to I put myself in the shoes of somebody who's bought 10 Bitcoin on there somewhat recently and having now my address out there for the world. That's really scary.
Yeah.
So yeah, but I think Armstrong's response seemed pretty reasonable. He's refusing to pay the 20 million ransom. Instead, he's redirecting that as a bounty. I thought that was the right call. 400 million, that's to reimburse people who were tricked by social engineering. Right call. So very shitty situation, but I think he did some good things there in response.
So it was actually pretty extensive, the stolen data: names, postal addresses, email addresses, phone numbers, government issued ID images, masked social security numbers, the last 4 digits only, which can be used to access a lot of gated information out there on the internet.
Yeah.
Bank account numbers, account data, balances, and transaction history included. So this was pretty extensive hack, actually. I had a Coinbase account. I closed it. Pretty sure they probably didn't remove my data from the database, I would imagine, but I haven't gotten any texts yet or anybody showing up at my door demanding my Bitcoin.
Yeah. I mean, I'm just thankful, like, no direct loss of funds so far, private keys, things like that.
Right.
It's slight silver lining to the situation, but yeah, it's bad.
Yeah. And maybe it's just a good reminder for people, if your data gets out there because a platform has been hacked. Unfortunately, this is far from the first time that has happened. There's been a lot of high profile hacks like this of major corporations that have people's data and they didn't secure it properly or got social engineered. So there's not too much as an individual you can do after your data gets hacked.
Buy a new house.
Yeah.
Buy a new house.
Quick name change. Quick name change.
Your name.
Yeah. There's some actions you could take there, but those are more difficult. But this is a good reminder of what these attackers are really after most of the time is social engineering you with the information they got. So This is the reminder: if you're getting calls on your phone, first off, if you have no reason to pick it up and it's a number you don't know, probably just ignore it. If it's your friend or someone that you forgot to save their number, they'll leave a voicemail. And then if you do happen to pick up and someone claims to be from Coinbase and they're only there to help you, do not have a conversation with them. Just literally hang up right there. Go log into your Coinbase account, see if something is okay. And then once you've seen everything is okay, delete your Coinbase account and contact Swan. That would be my advice for everyone.
Sound advice.
And let me add something there. It's not just that, hey, we're from Coinbase. It's, hey, we're from Google. Hey, we're from Apple.
Yeah.
Hey, we're I've seen these and I don't know who's who, which group's what. But let me be clear. It's not just like this is Coinbase calling. This is Google. Your Gmail's been hacked. This is Apple. This is Yahoo. This is whoever. YouTube support. I've seen all of these, right? I've seen all of these. And you need to be like, don't give information to anybody calling, right? Like if you really are concerned that is actually this company, hang up, call the company on their direct line that you have verified appropriately online.
Or an email address with the company's domain.
Yeah, or the email address.
Yeah.
Like,
none of these companies are going to call you about an issue.
Correct. Yeah. And pro tip on iOS, at least, you can automatically send numbers or calls that are not in your contact list to voicemail, which has drastically improved my quality of life since I found that. So I highly recommend it. We do see this a lot at Swan. We have built a lot of tech to help prevent our clients from these kind of attacks, from being, affected by these kinds of attacks. We have rescued people's Bitcoin from these kinds of attacks in the past, or at least from it being sent, by just seeing signals through account activity that are odd, and raise flags, and then we contact clients. So this does happen quite a bit, and like Steven said, across all industries. But with crypto, it's particularly important to be aware and vigilant about what's going on, because this is a bearer asset with final settlements, and there are no refunds, or there's no company to call to reverse a transaction.
That's right.
So downside means you need to be more careful. It's more responsibility, but there are massive upsides to having a bearer asset with final settlements as well, as we've discussed many times over the years that we've been in Bitcoin. All right. Anything else there, guys?
I mean, I just wanted to say I'm glad to see it looks like each of you brought your most scarce and useful assets to this meeting today.
What would those be, John?
I see 4 good-looking sets of teeth here, boys, and we know those are scarce. We know they have utility, and what else do you need in this life besides your
Bitcoin
teeth?
maxis
Well,
like
here's an
Jeff
interesting
and
thing. I
Michael
actually had to
Saylor
go to
believe in
Sorry,
the value
Steve.
embedded in Bitcoin because of its scarcity. I still don't get this. My teeth are pretty scarce and pretty useful, but they're not worth billions of bucks. Still, for the believers, there's just no plausible way.
There we go. That's what we're talking about. An FT mini documentary about Bitcoin and Michael Saylor and MicroStrategy, or strategy, I should say.
Oh man, I really want to make a good joke there. First of all, actually, I had to go to the dentist yesterday to get a filling replaced. So actually, there's a maintenance cost on these things. You got to take that into account with valuation. It's just, that was crazy, that interview. I mean, it's just absolutely crazy to see that claim being made. It's asinine in its entirety.
She got a lot of views. I don't think it's exactly the reaction she was hoping for, but a lot of impressions, no doubt.
She shorted MicroStrategy in her, company stock picking contest, and finished fifth
Really?
from the bottom. Yeah, finished fifth from the bottom out of 1,300 people, and she's a markets reporter.
Well, I mean, she's right at the right place, right? I mean, it stands for financially tarded.
Ooh.
Got him.
I think Lynn had a little bit more
That was
measured
one of the
take.
most
Let's see what
frustrating
she
things
had
I've
to
ever
say.
seen. I can't believe people are comparing Bitcoin to teeth in 2025.
I'm bullish on it because it shows that it's still just poorly understood. If everyone understood it and this was the price, it'd be like, is this how far we're getting? But the fact that so many people still don't understand it, I'm like, well, that's why we're only this far. That's why Bitcoin's worth 0.2% of global assets, roughly, are Bitcoin's equal to that value. Gold's 2%. And that's partially why is because people are still like, my teeth are scarce. Why aren't they worth billions? It's because they're not part of a dominant network effect fungible protocol. It's like, why isn't my little pet protocol competing with simple mail transfer protocol or USB? Because it's not even close. It's just
They needed to interview you on that Financial Times piece.
Yeah, I agree with that. I agree with Danny on that one.
Great take.
Pierre Rochard had a great one on this. He said, if it wasn't for Bitcoin podcasts, we would all be learning about Bitcoin from the New York Times. Sorry, Financial Times.
The Financial
Very
Times.
true, man. This is the power of Bitcoin podcasts. We come back to this frequently. The Bugle's drawn a lot of attention here. And I mean, I think one of the biggest innovations in the Bitcoin community was the Bitcoin podcast, and Swan was early to that. Swan was an early adopter of Bitcoin podcasts and Bitcoin podcasters. And, that thesis has only played out over time.
That's right. Let's take a look at the chart and see what the scorecard says.
Boom.
Bitcoin's grading nicely with a bunch of A pluses, Bs. The established history is the only low mark here. And, that's not its fault. But Katie's teeth, hey, they're durable. Good to go, Katie.
She's got pristine enamel, I've heard. So that's good.
Oh my God. Okay,
Just
that's
one
gonna
more
go
comment.
down.
Brady,
Sorry.
she's been covering, she said it herself, she's been covering Bitcoin and crypto for over 7 years.
Yeah.
That part's just astonishing to me. Is I don't know. You haven't even scratched the surface after 7 years, and you're somehow a journalist at the FT. But
Yeah,
We'll
she just admitted she's completely stumped after all these years, and I just don't understand. Just do a little research. You're a reporter after all.
No, you guys are you're operating off weird priors here. She has worked at the FT for 7 years. What sort of person works at Financial Times for 7 years, right? We're dealing with someone in the tail of a distribution here. This is not, I'm not sure it's the right tail.
You're right. There's a self-selection survivorship bias going on there. Not a good one.
No.
If you watch Hurley's show from yesterday on this channel, which, by the way, I'm sure if you're watching this now, you probably know about Hurley's show on Tuesdays and Thursdays. Absolutely fantastic 10, 12-minute recap and kind of dive into topics in Bitcoin and macro, etc. And he had a very Canadian, very Midwest take on this. It's like, watch the end of it. It was great. It's just like, let's not pile on to Katie, right? This is a good thing that people don't understand. Let's teach her, and I love it. I very much appreciated Hurley's take. Yeah. The Midwest Canadian hospitality.
I was a little mean there. I apologize.
It's okay. Hey, toxic maxis have their place. I just also like the very empathetic, understanding maxis, just shout out to all of us out there. Although I can be kind of toxic at times too. I usually just keep that to the DMs, like yesterday.
I want to shout out a quick question from the chat.
Yep.
Someone explained the innovation of digital scarcity to the doozy bin. Yeah, so awesome. You're probably looking at that chart. It said that Bitcoin had innovated on digital scarcity. So the thing to understand real quickly is that prior to Bitcoin, imagine like an MP3 file, right? Remember, like years ago, you'd download an MP3 file to iTunes or whatever. And so like you could make as many copies of that file you want, or like a Word document or a spreadsheet or whatever, right? If I want to copy an MP3, a song or a video on my computer, I can make millions of copies very, very easily at very low cost. There's no scarcity to that thing. And actually the challenge in the digital environment is because something is digital, it is generally trivial to replicate. And so what Bitcoin invented was a way to make something both digital and scarce, meaning hard to replicate, actually really impossible to replicate. And, that was proof of work. That was the mining network. That's the network effects. I won't keep going down that rabbit hole because it could take an hour. But Bitcoin was the first truly scarce digital object of any kind which could exist on the open internet. And that's in a very literal sense.
I think probably the easiest way to understand how Bitcoin does this is that there are, like 100,000 plus nodes, 15 or 20,000 are publicly seeable. We have estimates that there's about 100,000 out there or more. Each of those nodes are checking the Bitcoin ledger or the blockchain. It's a ledger of transactions to verify it, to make sure that there are no double spends. There's no duplication of Bitcoin happening in all those transactions. And that happens every roughly 10 minutes and being verified all over the world in a decentralized way. So that's basically how it works.
Yeah.
Good question. What else do we have, guys? Let's see. Let me go to the doc.
So much momentum on these treasury companies, I mean, we've talked about this probably every week for a while, but it's heating up quickly. And I wouldn't be surprised to see over 100 billion deployed by these companies, including MicroStrategy this year. It's going to be hugely impactful.
What do you think about demand? I mean, you could these leveraged Bitcoin equities are essentially a way to get exposure to Bitcoin in a leveraged way. What's the demand for the number of companies? I guess how many companies can actually run this strategy to satisfy the demand for leveraged Bitcoin equity and the associated financial products that come with it?
It's a big question. I think we're going to see it answered over the next 12 to 18 months. I think on this show, Steven and I were batting around the idea. I think we just kind of arbitrarily chose a number and we said 100. Like, are there going to be more than 100 publicly traded companies who actually do the leveraged Bitcoin equity strategy. That means not just convert a little bit of your treasury into Bitcoin. That means you're tapping the debt and equity capital markets to some extent to acquire more Bitcoin. I think Steven took the side that he thinks there will be over 100. I said it'll probably be in the dozens. So I took the under, but I'll be happy to be proven wrong on that one. So we'll see.
I mean, is this just a giant speculative attack? Is that what's happening here? There's so much fiat out there that will want to get into Bitcoin that are structurally not able to at the moment, right? That's the arbitrage that Saylor has been, exploiting for the past 4 years. Fixed income assets, bonds, etc. They can't get access to this, asset for various like structural rules around, what kind of assets they can own, etc. Right? Is that the correct understanding? And that there's just all this capital out there that wants to get into Bitcoin, and this is the only way they can. The question is how much capital is out there? Like, what's in the bond market? What's the demand, right? And these instruments that strategy has created, very innovative, new things, 0 to 1 moment for this kind of financial instrument backed by Bitcoin. They're seeing incredible demand coming in. They've been able to stack over 500,000 Bitcoin over the past 4 years with this. So how much is out there? They're also returning, like great returns, right? Like the kind of returns on debt that debt issuance that you don't see anywhere else.
Absolutely. Yeah, no, I mean, I think it is a giant speculative attack, and I think there's a lot of angles. Also, shout out Zach Koons. Great to see you on the show, man. Thanks for tuning in. I think you see, I think there's a lot of demand. I think there's a lot of capital that's locked up. I think there's a lot of capital that can't access Bitcoin. I think there's bond funds, there's emerging market funds, there's very specific targeted funds, there's venture capital funds, private equity funds. Like, all of these pools of capital can only access specific instruments. I think most capital can't buy Bitcoin. And this is doubly true when you get to international markets. You get to kind of like the Metaplanet story was that it's very difficult for most people in Japan to get exposure to certain things. Some of these plays that are spinning up around the world, it's difficult for investors in a number of these markets. What people don't understand is, like, even if you can buy Bitcoin in some of these countries, Bitcoin may be taxed more heavily. You may have to pay excessive transaction fees. It may have a different capital gains rate tax as well as others. It may fall under a different regime. You may have a hard time accessing the ability to buy it, and you may have a limited exposure to US equities. So, like, there's all of these limitations that people truly don't grasp. And that's also true within the US in different pools of capital, bond funds, PE funds, emerging market funds, resource funds, natural, blah, 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 blah. Like, it goes on forever. These companies are unlocking pools of capital to get Bitcoin exposure. Full stop. There'll be a lot of them.
I think there's so many different ways to summarize this and condense what's happening here. Adam Back had a really good one that we might show here in a second. But yeah, like one of the most succinct ways I could think to say it myself before we go to the Adam Back tweet here is it's taking the fact that there are tons of pools of capital out there that have different investor mandates, but also risk appetites. And they want exposure to Bitcoin, and spot Bitcoin just does not do it for them based on their mandate. Mandate means what they're allowed to invest in. And then risk appetite means what risk they can take on the upside or the downside. And MicroStrategy and all these other leveraged Bitcoin equities are saying, hey, you want Bitcoin exposure, but spot Bitcoin doesn't work for you? Well, we'll get the spot Bitcoin exposure. You get the type of risk and type of security that you're looking for. That's how I would somewhat succinctly describe it. But Adam, back here, I thought this was a really good one. It's from a month or so ago. MicroStrategy and other treasury companies are an arbitrage on the dislocation between the Bitcoin future and today's fiat world. A sustainable and scalable 100 to 200 trillion trade front-running hyper-Bitcoinization, scalable enough for most big listed companies to move to BTC treasury. So, like I said, there's a lot of different ways to describe what is actually happening with these companies acquiring Bitcoin, and that's another good one from Adam back there.
Yeah, I really agree with Adam. Let's run it back. I think he's got it, directly on point there.
Absolute legend. Cited in the white paper, created the precursor to Bitcoin's proof of work.
Wow. And he's still here, posting on Twitter with the rest of us.
That's right.
Every day, Twitter, X.com, whatever you want to call it. It is like the choice jewel of billionaires. Billionaires could spend their day doing anything, but they choose to post because it is one of the finest pleasures in life.
It is true. And he's been working on this since the 80s, guys. eCash has, some of the pieces of Bitcoin's system, it goes way back, right? Like Satoshi didn't invent all of it. He pulled from a lot of pieces, including reusable proof of work made by Adam Back. And he's been on that cypherpunk list where all of those ideas been discussed for such a long time. Absolute legend. He's here hanging out, super humble guy. If you ever get a chance to see him, if you're going to Vegas, for instance, and you see him around, just go up and say hi and say thank you. Really cool dude.
Can I address one question that just popped into the chat here? Why don't you recommend individuals use a mini version of MSTR to loan against their Bitcoin to buy more instead of only HODL? I think this is a really interesting question. I think people can do versions of this, but what you have to remember is that you're not going to be able to borrow and tap debt and equity capital markets on the same terms and timeline that a $100 billion company can. So for example, the typical Bitcoin-backed loan, you pledge your Bitcoin as collateral, that you could get liquidated. That's not how Saylor does it. Saylor is not worrying about the price falling overnight because he gets a margin call and gets liquidated. He has it's been said many times, but the way the Saylor strategy fails is Bitcoin has like an 80% drawdown and stays there for 4 to 5 years. When an individual gets liquidity against their Bitcoin, it's not the same terms. You can't issue a 0% convertible bond that doesn't mature for 4 years.
Right.
Your interest rate that they range anywhere like 9 to 15%. That's not that great of an interest rate. You also have to be monitoring the term the whole time to make sure the price doesn't fall too much because you have to add more collateral. I'm not saying don't do it. I think people could do it and be successful. You're just not going to be able to pull it off in the same way and with the same limited risk that MSTR would.
Absolutely.
Yep. Yeah, I think the personal loans, just review things very carefully. Personal responsibility is really important on this front. Make sure you understand the terms, understand the risks, where you might be liquidated or margin called, etc. Make sure you have enough Bitcoin to throw down to additional collateral if you need to. But it is, I think, a good tool if used right to get access to cash and use your Bitcoin, keep your Bitcoin, kind of leverage your Bitcoin to get access to cash for a short term.
Also, for our Swan Private clients, we actually have a great lending product that recently became available at kind of lower rates for the market. So if you're a private client, you're part of Swan Private, and you're looking to access liquidity based off your coins, we do have the ability to do that now. Just reach out to your rep or to support.
Awesome.
Shout out Cody in the chat. Great to see you, man. Thanks for tuning in.
Well, we've got a nice clip here from our new CIO, Ben Workman. It's awesome to be working with the workman in Slack and seeing him around. He's been all over the place representing Swan over the past month and doing a great job. A lot of you might know him from MSTR True North and Hurdle Rate podcast. Hangs out with Punter Jeff and those guys. So this is an interesting clip. I thought we could riff on it for a little bit. Here we go.
Is highlighting the companies that have fallen into that trap, that are sitting idle, that are sitting stagnant, because now investors and also employees are finding out that there's a way where you can reignite your company and you can find a way to bring more value to your shareholders. And it takes one simple change, and that's that you reevaluate your treasury, right? You open your eyes to the opportunities that are in front of you, and you act with a little bit of courage that makes you actually take those opportunities and take a chance. Because if you're already not generating any value for your shareholders and for your employees, then who are you really serving as management? I think that it's going to become so loud that these companies are going to get put under another lens where they're going to have to start answering those questions and saying we maintained and we incrementally got our revenues up because we adjusted for CPI or whatever it is. That's not going to fly anymore, because there are ways that are easily accessible where you can unlock that value for everyone in your ecosystem. And I think it's about time that these executives get pressure put on them to start answering those questions. And I think that's coming quicker than most of them are going to be comfortable with.
It's almost kind of uncanny valley seeing him not in the basement, you know?
That's right.
You know?
Yeah, I think this is just another instance of game theory playing out, right? This is like a Bitcoin treasury game theory where, as you know, you pick up momentum and more companies are doing this. And I'm not talking necessarily here about the leverage Bitcoin equity strategy. I'm talking about putting Bitcoin on your balance sheet, right? And to make better use of your cash and grow the business again so that you can get access to, you know, you don't just have to make term profits based on business activities. You can put Bitcoin on your balance sheet and benefit from the adoption of this new asset over the next 10, 20 years, right? You'd be an early adopter as a company. And so this is a new sort of game theory, a sub game theory, a niche game theory playing out in my mind. And this is what Ben's talking about. This pressure is going to be put on these business operators to get Bitcoin on the treasury, for God's sake. Like, why haven't you done that yet? It's like, it's going to become seen as a business best practice, right? To put, you know, money in your treasury.
Irresponsible not to do it.
Yeah, exactly.
Absolutely. It's going to be a huge theme this year. I think over the next 6 months, the corporate adoption is here. It's accelerating. It's big. I've heard a lot of things from people working in the institutional segment, you know, along, you know, BitGo, Galaxy, NYDIG, just people exposed to those sides of the market. There's so much movement happening.
And 500 billion earlier, the Vibes Capital estimate.
Exactly.
For Bitcoin treasury demand.
Easily. You know, we've run some very sophisticated vibes-based analysis and expect something around the zone.
That's like a midterm, you know, projection.
Yeah.
Long term, like Adam Back said, $100 to $200 trillion, you know, long term.
We're just thinking this year. And actually, there's something notable. According to Alex Thorne is extremely bullish right now. So that's good.
That's all I need to know.
That's noteworthy.
I'll rest easy tonight.
Yeah.
Yeah.
Yeah, I would just say the way there's like a big question about, I totally agree with what Ben said, but it's leading to this big question of, is this going to turn into a mania, the corporate adoption? Are businesses going to get stupid with the way they're executing the strategy? Is it going to lead to a blow off top? Is it going to lead to a prolonged bear market in Bitcoin at some point in the next, 1 to 3 years? All good questions. People can differ with their opinions on it. I would say, at least for now, there has not been a company that has laid out their strategy for this and has made people say, oh my gosh, what are you doing? This is, beyond stupid. You're taking the wrong kind of leverage, et cetera, et cetera. So most of the companies doing this, or maybe all, have been prudent so far. So it remains to be seen if it's going to get into like a FOMO YOLO type of blow off top. But that's something people are talking about. But again, I don't think there's any signs of it. People are just giving warnings for it.
Yeah. I think there's no signs of it currently. No one's levered in that way, but there's obviously you could expect that might be something that happens. It's something you need to keep an eye for, but it's not here today.
Something that I noticed about a couple of these companies that have been announced recently is a lack of lockups for like earlier shareholders, pre-public listing shareholders. Does that concern you guys at all?
I think it's more so a question of, what were the motivations and intentions of the people who struck the deal? Are they in it for the long term? Is it more of a short-term trade, so to speak, for them? But I don't think that necessarily is something that's bad for the Bitcoin price. Like, to me, they're still going to acquire Bitcoin. Maybe their MNAV pops on the open and they sell their shares. Okay, fine. We can talk about the ethics of that and whether that's really the right thing. But that to me is not going to cause that's not going to materially affect the Bitcoin price, I guess is what I'm saying.
I also would be curious kind of where some of it's coming from, because I've reviewed a number of these and I haven't found anything yet that had no lockup on insiders.
Oh, okay.
So I'm a little like,
wrong.
no, you're good. And I've heard other people say it. So I'm not even saying that specifically for you. I think there's a difference between, I think people are getting confused, like a lockup on capital providers that are funding the deal versus like key insiders.
Got it.
I have seen stuff without lockups on like the capital that's coming in, but I've never found something without like, the CEO or the insiders like.
Right. Yeah, no, I agree. I agree. I was talking mostly about the capital coming in. I was just and the concern I've seen is that, this could lead to kind of dumping toward the first, month or two of the stocks listing, and maybe difficult for early retail investors once the stock's listed.
It's possible. I mean, it's possible for sure. But I also think it's like, just because I've seen a few of these, been interested in the space, and like, I almost imagine you would see much worse initial performance if that was happening. I think it's actually kind of remarkable. You can look across the tickers and, I think you start to be a lot more worried about that when they're just all like down 80% from listing or something. But so far, not so much what we're seeing. Could we see that later on, or could we see that at a future point where, like it's that when you start seeing that, that's when I think you get concerned on it.
Yep. John, you've got a good list of quick hits here. You want to take us through them?
Yeah, for sure. So as you guys know, this group does like to talk, so we could get derailed on any of these. So let me just list them out so you guys listening have a good sense of key things that happened this week, and then we'll try to dive in. So there's a new U.S. government spending bill that shows Lynn Alden's meme is almost certainly correct. Like, this is total validation of the "nothing stops this train" meme. The deficits look like they're not only going to stay as wide as they are now, they're likely to get bigger going forward with this new spending bill. Coinbase, we talked about the hack and the leak, but also noteworthy that they got added to the S&P 500. There was U.S.-China trade deal progress that was announced by the White House on Sunday, which feels like it was a million years ago, but that was Sunday, so we didn't talk about it last week. Wanted to hit on that. There's a video of Jim Chanos shorting, expressing his trade, which is going to be shorting MicroStrategy, the stock, and longing Bitcoin. I guess apparently he thinks that MNAV is going to collapse or compress. There's an Abu Dhabi sovereign wealth fund that already owns Bitcoin, and they added some more to their holdings. And then there's a Wisconsin pension, which sold some of their Bitcoin ETFs. Interesting one. We can talk about that. And then more recently, there were meetings in Riyadh in Saudi Arabia where a whole bunch of high-profile people were in attendance. So just to, sorry, I'm getting a phone call here. Just to list off some of the people who were there. Obviously, Trump was there. MBS is there. Elon Musk, Sam Altman, Larry Fink, Steve Schwartzman, David Solomon, Ray Dalio, and then a bunch of other political figures as well. Those names probably are not relevant to people for Middle East political leaders, but that's kind of the list. So yeah, let me know. Do you guys have any preferences of which of those you want to dive into in the remaining time here?
I'll throw one more on the list. Cooler than expected April CPI data, which eases Fed inflation concerns and could bring up chances and bring forward the chances of a rate cut. So I'll add that to the list.
That's a good one to throw out there. And you remind me, Brady, I should mention this one too, because it's going to be interesting. I think there's conflicting information about what inflation is going to be. You just highlighted one that it's been cooler than expected, at least in the April data. But there was another piece of info that suggests maybe at least certain pockets might be hotter than expected. So Walmart said it plans to raise prices this month, early this summer, as tariff-affected merchandise hits store shelves. And the quote from their CFO was, "The magnitude and speed at which these prices are coming to us is somewhat unprecedented in history. I fully believe what Walmart is saying there. My summary take here would be there's going to be pockets of things that likely do increase in price as a result of tariffs. But that is different than an across the board, because CPI is meant to be an aggregate measure of all items across the board. We can talk about the limitations. We can talk about how difficult it is to actually calculate that, but that's what it's meant to be. So some specific pockets of price increases due to tariffs does not necessarily translate to CPI as a whole going up. That's my general thinking of what's going to happen here. Like, I don't think there's a risk of us going back to 9% CPI readings anytime soon. But you guys tell me what you think.
It's been an interesting landscape, right? I mean, I think the macroeconomic landscape has just been entirely novel recently. I mean, the tariff impacts are unprecedented. And it's been, I think it's hard to have so it's, the place I land on this is everyone's worried about the inflation from tariffs, right? Because it's like a very simplistic, prices will go up. But there's always been this pushback, right? That if there is no additional money in the system, like let's say there's 100 units of money in the system and the prices of everything goes up 10% and there are no additional units of money, demand falls by 10%, right? Like it's a negative demand shock because you have the same amount of money and everything costs more. And I think this is it's easy to see the first order effect of prices go up and there's higher prices, but then you get to see a negative drag on that as suddenly people start buying proportionally less. And I don't know. I don't know exactly how it shakes out, but it's not super surprising to me that we've seen CPI cooling. It'll be interesting to see when this first pass of tariff markup goes through. But again, I have a hard time getting fully on board. I'm somewhat skeptical.
Yeah, I personally think CPI is not going to get that hot anytime soon. But you also have to remember what's not in CPI. And the two big ones are home prices and financial asset prices. So I think we will have forms of inflation, but it's going to be more so concentrated in things like houses, financial asset prices, versus will things at the grocery store become more expensive?
Yeah.
100%. And to add a little bit to the Walmart specific thing, I think Walmart really relies on their business model is all about volume, and they operate on just these razor thin margins that really can't afford any kind of a material price increase without having to pass that along to the consumer. They're not making a lot off of each product they sell. They're just selling a whole lot of products.
Sure.
And so they're going to take the hardest hit.
Exactly. Okay, let's hit some of these that we talked about here. So we'll just add a few numbers to this spending bill that I don't know exactly where it stands, but it looks like it passed. I don't even know if it passed the House, but basically it's going to be a bunch of tax cuts and some spending cuts. But guess what? The tax cuts are much bigger than the spending cuts. So we're talking about a increase to the budget. Again, we're not in a recession here. And the federal government is just saying, hey, we're going to spend a bunch more than we already are. Spending nominally is going to go up. Deficit spending as a percentage of GDP is now slated to go up. This is the train that does not stop. So just keep that in mind.
Yeah.
Okay, so other items we wanted to hit on.
Saudi stuff is really remarkable.
Let's do that. Yeah.
It's two things. It's economically impactful. It's economically material. There's a really material force there with just the amount of capital that's going back and forth and the kind of AI compute infrastructure that's being built out in Saudi. I think is really interesting. The speech itself, though, was a profound refutation of decades of neoliberalism in a real interesting way. where it was, I think, the nail in the coffin for interventionism. I think that the speech we saw Trump give was basically the US walking back from trying to play an interventionist role in these countries. And instead of treating them like vassal states, and in some ways, instead of treating them as like cultural or ideological vassal states, Trump is walking back, I think, to I said centuries, I meant decades, like 2 or 3 decades of neoliberalism on an interventionist lens. And I think this was one of the shocking things about this speech, is it just signals a very different relationship between the US and countries internationally.
For sure. And I think it's part of this theme that there's going to be this, and have talked about this when there was all the market vol and Trump and the team are talking about tariffs and deals. And we kind of said this back in April. We were like, hey, May, June, July is going to be the time when a lot of meetings happen and certain deals get announced. And I'm not going to pretend to know all of the details of what came of this, but just the people I listed off that were at this event, it's obviously kind of the most high profile people you could think of. And then some of the numbers coming out of it were pretty big in terms of investments that are going to be made back and forth. I would just make a comment, like the hater take to this would be, these are just headlines. They're not going to follow through. We've seen this before. Someone claims they're going to build a factory here. They don't actually do it. You have to be mindful of that stuff. Like it's one thing to announce, hey, we're going to invest $600 billion in your country over the next 5 years. And the headline gets a lot of attention. And then you find out maybe they didn't do it for a variety of reasons. So you've got to make sure there's actual meat behind the headline. But I think this is part of the trend of we're going to see more meetings between the U.S. and other nations and other nations without the U.S. About trade deals, currency deals, investments in each other. Watch out for more of this over the next 2-3 months. And in general, when these deals come out and it's shown that it continues to be shown that, okay, there's a trade deal here. It's not 100% tariff like we thought it was going to be a month ago. I think you continue to see markets rally as these deals get announced.
Yep.
Definitely.
That's right.
All right, guys, I think we'll wrap it up there.
Wonderful.
Yeah. Happy
Pleasure.
Friday to you guys. I'm going to run through a couple of shills. You guys can drop if you need to. I know you guys probably have client calls coming up.
Let's go Knicks.
See you guys.
Go Knicks. See you,
See
Steven.
everyone.
Okay, check out Mara, guys. Mara supports this show. We appreciate them. They secure the Bitcoin network. They're the largest publicly traded miner on the planet, focused on energy, transforming the energy infrastructure through digital asset computes. Also, check out BTC Prague. This is the best Bitcoin conference in Europe. It's been around for quite a while now. This is the 3rd year, June 19th through the 21st. Check that out. We are working with the BTC Prague crew to bring you BTC in DC. This is going to be a really unique Bitcoin conference, unlike any other that's come before. Held at the Kennedy Center, the historic Kennedy Center in Washington, DC, right next to the Watergate Hotel. You can go and check out the room where the infamous spying happened that got Nixon in trouble. This is going to be really fun, bringing together policymakers and the Bitcoin industry leaders to discuss Bitcoin innovation and public policy. Also, check out Swan Private. All 3 of these guys that were on the show today are reps with Swan Private. You get a dedicated representative. We build strong relationships with our clients. You can call us, text us. We'll take care of everything that you need in terms of building your Bitcoin position. Which is just a lot of fun. We have a comprehensive Bitcoin wealth platform. We really, really actually enjoy working directly with our clients. We get a lot of, just joy out of doing it. We have also Swan IRA. You can put Bitcoin into your IRA. It's easy to set up, and you can automatically start putting Bitcoin into your IRA. You can, again, talk to our team. Just go to swan.com and set up an appointment to talk to a representative. We'll walk you through everything that you need to know about setting up an IRA and putting Bitcoin into it. Also, check out Swan Vault. We've got Lynn Alden and Adam Back, the guy we've been talking about earlier in the show, talking about Swan Vault. we work with Blockstream to, we'll use the Blockstream Jade device with Swan Vault. This is by far the easiest way that I've seen to set up a 2 of 3 multi-sig vault. It's an Apple-like experience setting up your vault. It's really cool. It happens really fast, super slick. So check out Swan Vault if you're looking to take your Bitcoin custody, self-custody up another level so you can custody your own Bitcoin, but you don't have to go it alone. All right, we'll see you all next Friday at 11 a.m. Pacific, 2 p.m. Eastern. That's it for this week. Thanks for joining us.